Even if you did not have to deal with a lender yet, perhaps you're contemplating to start your business or purchase your very first house, on a subconscious level, you likely know that having great relationship with lenders is super important. And I can attest to it. I've bought, between myself and partners, 20 plus houses, including the commercial office in which I'm shooting this video. And I can tell with a confidence that having that relationship comes handy. That could be the breaking point, whether you have enough cash to run another month or two until you get paid from a customer, or whether your offer for a house or a business is going to stand out compared to the other one. It is also so important, not just the approval process, but how fast the lender will turn out for you if they know you. So this building in which I am was purchased by Anne Arundel County Economical Development Corporation. Those are the guys who funded it. It's called Alternative Financing Option. It's not a regular bank, although I went to a regular bank and I asked for them for an interest, and their interests were really expensive and very high. And they were ARM, which means after 5 years or 7 years or 10 years, the interest would fluctuate. And I don't like fluctuating interest, because look what happened. With COVID, the interests were zero. Everybody was giving out 1%, 2%, 3% loans. And now what is it? Now they're like 7, 10, 11%. It's just crazy, depending upon, of course, where you're at with your tax credit and Social Security and etc. However, when you have great relationships, you're able to get these amazing loans. I was funded for 20 years fixed rate that no other traditional bank was able to do. So how to establish those relationships? It all starts from someone. Ideally, someone who you know, who can introduce you. In this case, Wes, who is with Anne Arundel County, introduced me to Steve, and he said, hey, we've got this program. So then I start working with Steve. In your case, if you don't have a person like Wes that you did not meet yet, then you can directly reach out to those organizations and pick up the phone and start asking for help before you fill out. And it's okay to set up an appointment. Try to get them on a phone call, ideally a video call, or even in person. If you can schedule in person, that's going to be so helpful, because the lenders must see you, know, and judge you who you are to start offering you those appealing rates. So remember, not only lender chooses you, your job is to choose the lender as well that you're going to be working with. So when you do that, there are a couple of factors that you should pay attention to. On top of interest, which is super important, and the term of the loan, including the down payment that they're requiring from you, depending on the loan package that you're about to go, then there are a couple more things. When you call, pre-screen them and be okay. Just ask the questions such as, how often do you help companies like mine? Have you ever helped the companies like mine? Is there a case scenario, best case scenario that you can tell me? Because your job is to gauge how knowledgeable that person is in that domain. So in my case, it's a cleaning, plus I was flipping houses, which would be a real estate. So it was two. I was trying to see if my lender was aware with two of them, so it would check my mark box. And the other option would be the how willing they're helpful and to go above and beyond for you. So it's a win-win relationship. By taking the loan from them, you're paying it back with an interest, which the lender is making the profit from which their salary is eventually paid. So by giving you a loan and satisfying your need to get this commercial building or loan for a business, they are benefiting and you're benefiting. So this is a two-way street. So find out how helpful they are to work with you and willing, and be straightforward, because they're like lawyers. When they ask you questions, you want to tell them the truth. If you have a custody payment, if you have childcare payments, the payments based on whatever the circumstances you have, the mandatory payments, that try not to hide them. If you were hit with a bad score, eviction or credit or bankruptcy, that is okay too. It happens to people. You have to be upfront and explain what it is, and they all have guidelines and requirements. So if they can jump over it, or sometimes they can pick up a phone and call the underwriter and make things happen, they'll tell you so. If not, at least they'll tell you when is the good time for you to go back for that. So main problems. I was in Anne Arundel County's money educational workshop right now, and I'm just coming out from this. And these are the questions that the lenders that provide grants and loans were responding to. And one of the other questions is, what are the problems when people or businesses reach out to lenders? And what they said is, one would be if you're reaching out to a lender and you don't know your numbers. So you better be prepared what the money is to be used for. Number two is you cannot articulate what are you trying to purchase, or why do you need the money? So they clearly have to understand why you're going to use the business, and you should be able to relate what and how this money is going to help them, so they have a confidence to know how they're going to get paid, because they are taking risk by funding that money to you, and they have bosses to respond as well. And then the submitting the application, some people think if you submit the incomplete application you start your process sooner. No, that is not the truth. So the lenders over there were telling, wait, if you need more information, instead of submitting incomplete application, it will get you nowhere. It won't get you sooner in the queue. It won't guarantee that you're going to get the money quicker. So instead, wait. And if you need help, reach out to them and say, look, this is what I'm trying to do. These are my weaknesses. These are my strengths. I think this is where I'm good. What else do you want me to do? And what would enhance my application by increasing my percentages of getting funded? So reach out to them, and they're like, we'll be happy to do it, because if we're giving you money and you're paying us back, then our bosses are happy and we're getting the interest. So it's win-win. One more important question was, in which instances they will not fund an owner or an applicant? And that was super important for me. I'm like, okay, tell me what would have to happen for you not to fund a person who's asking or requesting a fund. So number one was business owners is not willing to go all in. And how that comes out is, a business owner says, I'm not going to personally guarantee this loan. So business owner could say, look, this is my business. I'm going to sign for a business, and I'm not going to sign for myself because I don't want to personally guarantee it. So that was number one no-no. And number two no-no was business owners don't want to pledge their personal collateral. They can say, oh, I don't want to lose my personal house. I don't want to guarantee it. So then the lender is, hey man, if you're not guaranteeing it like yourself, then you're not confident in the success of this endeavor for which you're asking to use my money to give and risk in you. So be mindful of this when you go to them. And this is the case with me as well. Like, I had to guarantee personally too. When you go to them, be open-minded, because they need to see, as a business owner, you're going all in. You're guaranteeing personally, you're putting out your personal collateral. This way they know you're going to work harder when challenges do happen, and challenges do happen. Unfortunately, I can promise you that as well. But if you're all in, you're going to overcome it and find the solution. And one more other misconception was, hey, some people just apply and then think that it's taking them along. The clarification was taking them a long time to get a response from a financial institution. The clarification was now they are a lot quicker to get back to you. In general, up to 21 days, they'll let you know whether you approved, whether you denied, whether more paperwork is needed. So go ahead and keep on crushing your businesses. I'll see you right inside of this video, and this should help you to keep your funding and keep your business going. Bye-bye.